How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want to follow me when I'm not on YouTube, do me a big favor. Get down in the description box. Click on that Richard Fain Millionaire Mentor Instagram link and give me a follow on Instagram. And then send me a DM to let me know you're rocking with me. I certainly would appreciate that. www.richardfain.net. That's the new website. We've been up about 3.5 months, almost 4 months, and it's going amazing. Over 250,000 of you guys have went and checked out the website. So thank you. Hundreds of you guys, hundreds and hundreds and hundreds of you guys have decided to make an investment in yourself and grab some of those digital products to help you collapse time frames and get to your pot of gold at the end of the rainbow. So double thank you to you. Appreciate that. Love that people understand the most important investment you can make is in yourself. Without making an investment in yourself, guys, and increasing your level of knowledge and your, just increasing your confidence in yourself. See, it takes confidence to be able to dive in and buy big boy blue chip paper assets when it's so much volatility in the market right now. You got to have confidence. How do you get confidence? Increase your skill set, increase your knowledge. That gives you confidence, which you increase your knowledge by checking out those digital products on my website and making an investment in yourself. Then you're ready to execute. Then you'll understand what's happening right now. Those that don't understand what's happening right now is because they're not confident and or they don't have knowledge. You got to have some knowledge about what's going on in order to make it through this volatility that we're experiencing right now. My website can help you do that through those digital products. So go grab you some. Make an investment in yourself. Therefore, you're making an investment in your future. While you're there on the website, which is the second link down in the description box, while you're there on the website, consider joining the private mentorship club. Over 850 people strong. We have a good time. We had a live stream last night. I had some internet difficulties, but once we got that straightened out, the live stream went well. Of course, I got this raggedy internet here. I got to get that taken care of, and I'm working on it. But nevertheless, we had a great live stream on the private mentorship club last night. A lot of participation, and I was stoked. A lot of Q&A, answering questions, doing things of that nature to help people get to their pot of gold at the end of the rainbow. Guys, if you want to be a part of the fastest growing financial community on Patreon, you got to get to the private mentorship club. We are a club full of wealth builders. That's all we do over there is build wealth. See, all the people over there in the private mentorship club understand what's happening right now, right? They understand this is a necessary. We have to have corrections and consolidations in this continuous bull market. We have to. They understand that. And that's why they're doubling down, buying more of their favorite individual stocks, buying more of their favorite ETFs. Not worried about all this volatility, not worried about all this rhetoric, not worried about all this propaganda. They're just buying because they understand you build your wealth in the red, you collect your wealth in the green. They know that. How do they know that? Because they're part of the fastest growing financial community on Patreon. And that's what we talk about. That's what we constantly talk about every day, is building this wealth. If you're over here in the matrix, guys, by yourself, all alone, nobody to talk to, nobody to help you, you probably already parachuted out of this thing. Some of y'all who ain't got this financial blanket over you that I call my financial community. It's a financial blanket we have over each other. We ain't parachuting out because we understand what's happening. But if you don't know what's happening, you're probably parachuting out. You're probably panicking, panic selling, parachuting out, missing your blessing, your financial blessing. Guys, get yourself a part of this fastest growing financial group on Patreon. Click on that join button. Click on that membership button in the website. And it's going to take you over to the Patreon website. You can sign up and get part of this group. We're growing fast, man. And we're not looking for a lot of quantity. We're looking for quality. I mean, it's amazing to be able to go in that community every day and see people building wealth builders at work. I'm talking about beginning wealth builders, intermediate wealth builders. And then we got people over there that are just already wealthy, but they're just continuing to be more wealthier and to help people. A lot of people are there just to help people. They already got money. They already got money, but they're there to help people because they got a passion for it. See, it's real easy to help people and have a passion for helping people when you build wealth and you ain't got to worry about working and taking care of yourself with somebody else's paycheck. See, when you ain't got that restraining you, you can go out and do amazing things that you've been called to do. But you can't do any of that if you're working for somebody to get a check. Can't do it. You got to go to work. Wouldn't it be nice at some point in the future to be able to not have to go to work, not have to worry about getting a check from somebody else because your assets create the check? That's what we do as wealth builders over in this fastest growing financial community on Patreon. At some point, guys, I'm going to be doing videos directly to, just to the club. We're going to get this thing so big that I'm going to probably do more live videos on the club than I will on YouTube. That's where we headed, guys. See, we're going to build this community to thousands and thousands and thousands and thousands of people. And that's going to be our primary focus. It's not going to be YouTube at some point. Y'all know, guys, I think big. I think big. I love YouTube, and I'll always have a presence on YouTube. But we're going to build this club where we have thousands and thousands and thousands and tens of thousands wealth builders all across the world. I'm talking about we're going to have thousands of wealth builders all around the world, guys. Every corner of the world, they're going to be in this Patreon financial community. You watch. You watch. Stay around long enough, you will see. Get yourself part of it. Last thing we need to touch on, guys, and we're going to dive into these rate cuts that we need to talk about today because they're coming. I believe they're coming. They're coming now. Ain't going to be no September. They're coming now, and I'm going to tell you why here in a second. But before I do that, if you want to become a wealth builder, you need a brokerage account. The number one brokerage account I use right now is the Moo Brokerage app. First link down in the description box. If you're 18 to 80 years old and you want to become a wealth builder and you want to be part of this movement, this financial wealth transfer movement that we're doing right now, but you don't have no idea how to do that, your first step is you got to sign up for Moo. Get down to the description box, first link, sign up for Moo. They're going to give you up to 20 free stocks of publicly traded companies just for signing up. How does that work? Well, here's how it works. Once you sign up, you click my link, you sign up, you need to make a deposit. Now, if you make a $100 deposit into your new brokerage account, they will give you 8 free stocks. The $100 ain't paying for no stocks, you're getting the stocks for free. The qualifier to get the free stocks is you need to put money in your brokerage account. $100, you get 8 free stocks. You put $1,000 in that new brokerage account, you get 20 free stocks of publicly traded companies. For some of you guys, that's a game changer because now you got 20 big boy companies in your portfolio, right? And they're going to have a dollar amount associated with them. Each stock can be valued anywhere from $2 a share up to $2,000 a share. I don't know what you're going to get. You don't pick it. I don't pick it. It's randomly picked. But at the end of the day, if I'm getting 20 free stocks of publicly traded companies, guys, I don't know how I turn that down. If you're 18 to 80 years old and you want to become a wealth builder and build some wealth over these next 3 to 10 years, you need to act today. You need to get down to the description box and click on that Moo link. Sign up, put you some money in there, get yourself up to 20 free stocks, and then send me an email and say, hey, Richard, I'm brand new. I want to be a wealth builder, but I got to learn how to use this Brokerage app. And then I'm going to send you 2 tutorial videos done by the good folks at Moo to walk you through how to use their Brokerage app. 3 features I want to highlight real quick: fractional share trading, DRIP, which is dividend reinvestment program, and then AIP, automatic investment program. Those are the 3 features that I love on that Moo Brokerage app. I'd love to tell you more about it, but you got to sign up. Send me the email, and then I'm going to send you that information that I told you, and it's going to tell you all about those things. And then you're ready to go. Then you're ready to go. Now you're a wealth builder. Now you are a wealth builder because you got your brokerage account, you got money in it, you're ready to execute. The next thing I'm going to do is I'm going to send you, along with those tutorial videos, I'm going to send you some wealth transfer blueprints that I have of all the things that I'm buying. See, I'm the creator of this fastest growing financial community on Patreon. I'm the creator of it. I created it like 4 months ago out of thin air. Why? Because there are people in this world, guys, who want to be wealth builders. There are people in this world that are tired of working for somebody, and they don't want to work for somebody the rest of their life. There are people in this world who want more time, more choices, and more freedom in their life so that they can go chase the things that are really important to them and not have to worry about money. See, that's a compelling reason for people to act. People are tired of working for people, the 1%. They're tired of the 1% manipulating them. At some point in their life, they want to control their entire life. And the only way you're going to do that, guys, is you got to be a wealth builder. You got to develop some discipline, some consistency, and some patience. And that's what we teach you to do in that financial community that we have on Patreon. That's what we teach people to do, is to have patience, consistency, and discipline. And we teach them how to be wealth builders, how to be traditional investors, buy and hold, big boy blue chip, long term. Now, we're not financial advisors over there. We're not CFPs. We don't tell people what to do and what to buy. We provide guidance. We provide a framework that has been established over hundreds of years. Why? Because we got wealth builders in there, such as myself, who've been doing this for 30 years. I ain't no CFP. I'm not a financial advisor. I'm not a stock market analyst. I didn't go to Harvard School of whatever. I didn't do any of that. I barely got out of high school. But does it matter? No, because I'm an executor. I'm a wealth builder. I know how to find companies that have the opportunity to be bigger companies tomorrow than they are today. And I put my money in those companies and I just watch them run. That's what I do, and I do it very well. That's what we have over in that private mentorship club. A bunch of wealth builders who are ready to help you become a wealth builder and get more time, more freedom, and more choices in your life. You got to make a commitment to yourself, though, guys. You can stay over here in the matrix and do nothing but work for somebody for the rest of your life. Or you can transition yourself over here to this financial community that will work with you and provide experience. That's what you get over there. Remember, I told you, we got people from beginners to people who got a lot of wealth in that group. Everybody in that group ain't people that are just brand new and ain't got no idea what's going on. We got a lot of people over there that got a lot going on. We got people over there that are wealthy already. But they're there because why? They want to pay it forward. They want to help others. See, they're already free. They already control 100% of their time. So now they're trying to bring others, get others to control 100% of their time. That's what I love about this group. It's not about ego. It's not about being an expert. It's about helping people. See, you help enough people get what they want, you get what you want, which is priceless. See, you can't put money on that, guys. The feeling you get from helping somebody, you can't put a price on that. See, what this world and this life that I live, according to my maker, the King of Kings, I'm here to help people, not to just make a bunch of money and be miserable. No, I'm here to help people. The money is just a tool to provide me the platform so I can help people. See, I can't help nobody if I'm working 8, 10, 12, 15 hours a day. Who I'm helping? I'm helping that guy or that gal who I work for. That's who I'm helping. That's who I'm helping. I ain't helping nobody else but them. But if I ain't got to worry about working 10, 12, 15 hours a day for somebody, and I got all that time where I can devote to helping people, that changes my life. What I do on YouTube has changed my life for the better. No doubt. No doubt about it. I'm a better person because I help people. That's what we do over in that private mentorship club. So like I said, get yourself down in that description box, click on that Moo link, get yourself signed up, get you up to 20 free stocks, send me that email through my website, www.richardfain.net. Send me that email. Let me know you signed up. I'm going to send you the tutorial video so you can learn how to use the Brokerage app. Boom, boom, boom. Now you're ready to rock and roll. I'm going to send you the wealth transfer blueprint so you know everything that I'm buying. Big boy blue chip. If you want to copy that plan, copy it. If you don't want to copy it, create your own plan. It's okay. I'm okay with that. My plan is only for me. But those that want to copy it, feel free to. I'm not your financial advisor. I'm not going to tell you what to buy. I'm not going to tell you when to sell. I'm not going to tell you any of that. But what I will tell you is what I'm doing. And what the rest of those folks over in that private mentorship club will tell you is what they're doing. What's worked for them, what hasn't worked for them. It will help you. And then you got to be a big boy, big girl and make your own decisions and live with them. And if you can do all of that, you can build some wealth. You can become a wealth builder. All right. So let's move on. Let's dive into the Fed and this rate cut that's coming. Check it out. Here's the headline. An emergency rate cut in the next week is looking more likely. So what y'all think gonna happen, man, when that rate cut comes? I think it's gonna be crazy. I think the market is demanding a rate cut, and the Fed gotta act. I told y'all yesterday, Federal Reserve Chair Jerome Powell, his legacy is on the line. And see, when these rich guys and these rich gals who got all this money, they part of the 1%, they don't worry about no money. What they worry about is legacy. Especially a guy like Jerome Powell. What he worries about, what keeps him up at night is his legacy. He already rich. He ride around private jets, best restaurants, best hotels, homes all around the globe probably. Whatever his deal is, the guy rich. So he don't worry about no money. He don't clean no house. He don't worry about cleaning his bathrooms. He don't worry about washing his cars like us regular folk do. He don't worry about that. The guy rich, he's a 1%er. So the only thing he worries about is his legacy. How am I gonna be remembered? That's all he worries about. But see, that works in our advantage because he don't want to be he do not want his legacy to be the guy that acted too late. He already got that as part of his legacy because he acted too late in order to increase rates after the pandemic. So that's one strike against him because people are already saying he acted too late. He raised rates too late. He should have raised rates higher sooner, right after the pandemic, but he waited. So already part of his legacy is already, oh, this is a guy that waits too late. He gonna do that again? Now you're gonna wait too late to reduce and throw us into a recession? That's devastating for a guy like that. Because all he has right now to build on is his legacy. He already rich. He don't do the same things you and I do. See, I wash my own cars. I clean my own house. He don't do any of that. So all he thinks about now is legacy. Most of those people on that FOMC, they think about legacy. They do not want to be the FOMC that waited too late. They already, like I told you, they already got one strike against them because they waited too late to increase rates after the pandemic. They waited too late. And that threw us into a 9% inflation rate because they waited too late. Now what you're going to wait too late again to reduce rates and throw us into a recession. That's why I'm telling you. Here we go. An emergency rate cut in the next week is looking more likely. That's the headline. Let's see what these folks are talking about here. Wall Street has been so suddenly gripped by fears of recession that talks of an emergency rate cut are gathering steam. See, pressure's on him. See, he getting pressure from the other 1%ers. He getting pressure on them. He's getting pressure on himself and the rest of his committee. If you heard yesterday, like I said, a couple of the Fed, not the Fed chair, but like the Fed governor, Fed presidents, a couple of them went on record yesterday. Oh yeah, we're ready to act. If the economy starts spiraling out of control, we're ready to act. No, it's already spiraling out of control. Y'all should be acting right now. It's already out of control. What do you mean spiral out of control? It's already out of control. You got unemployment at 4.3%. That's out of control. That's above what your estimate was. The Fed's estimate for unemployment was 4.1%. We are in month 8, and we've already blown through that estimate. We're in trouble now. I don't know what you mean if it gets out of control. It's out of control. Your estimate was 4.1% unemployment. We're at 4.3. Last time I checked, wasn't very good in math, but 4.3 is higher than 4.1. That's the last time I checked. My math is sketchy. It's very sketchy. But the last time I checked from my, 12th grade basic math, 4.3 is better or higher than 4.1. So we're already blown through your estimates, Fed. What are you waiting on? Well, we're going to get rid of interest rates. We're going to get unemployment. We're going to get inflation down to 2%. Well, maybe you will, maybe you won't. I don't know. Maybe you will, maybe you won't. One thing I can guarantee you, though, is if you don't act now, we're going to miss this soft landing. And that's going to impact your legacy. And most of you 1%ers that on that FOMC, they're 1%ers. That's all they're concerned with. Right? They're not concerned with nothing else other than legacy. They want to be remembered well, not bad. Good, not bad, right? So at one point on Monday, the swap market was pricing in 60% chance of an emergency 25 basis point rate cut within the week, according to Bloomberg. Now, some of y'all gonna say, well, what is a swap market? Go out on Google and ask Google. It'll tell you exactly what it is. See, one of the things about this channel here is, guys, we wanna learn how to research because it's gonna make us better wealth builders. You can't get spoon-fed everything from these guys and gals on YouTube. See, that's what we get dependent on. Then we don't want to go do no work. We don't want to do no homework. We just want to be spoon-fed by people on YouTube and TikTok. No, if you want to be a true wealth builder and take control of your own wealth building, you got to have the ability to do basic research, guys. Google is your friend. Go use Google and do some basic research. Stop depending on guys on YouTube and TikTok. Stop depending on your neighbor or some guy at work or gal at work. No, depend on you. Stop trying to transfer your wealth building activities onto others. You are responsible for it. So if you don't know what swap market is, go out to Google and find out and start your education. That's the best thing for you guys. Somebody spoon feeding you ain't helping you. It's not helping you. It's not helping you at all. Being spoon-fed. All right, so let's keep moving. The sudden shift in sentiment could be seen in the U.S. bond market, with U.S. Treasury yields, which are tied to interest rate expectations, dropping to their lowest level in a year. So what you got to look at, guys, is these U.S. Treasury bonds, because they're tied to interest rates, right? So what's happening is U.S. Treasury bonds are dropping fast, right? The yield on a 2-year Treasury note plunged as much as 16 basis points on Monday, yesterday, while the yield on the 10-year Treasury note dropped as much as 10 basis points. Investors are in risk-off mode after an unexpectedly weak jobs report on Friday. You guys know the jobs report came out on Friday. It was weaker than expected. We only came in at 114,000 new jobs added to the economy, which is the lowest amount of jobs added to the economy since the pandemic 4 years ago. Lowest amount. And guess what happened to unemployment? It went up to 4.3%. See, we're already in panic mode. The Fed just, I don't know what they're doing. I don't know, maybe there's somewhere, I don't know what they're doing. But panic mode is right now. You wanted the labor market to soften. It did. It's just softening too much. See, that's the soft landing. You want the labor market, you want the economy to grow, but you want inflation to come down. But part of that economy is the labor market. That's what drives the economy, is the labor market. People making money and spending it on crap a lot of times that they don't need. That's the economy. But when that labor market starts to contract and people get scared they're going to lose their job, guess what they do? They batten down the hatches. They don't spend nothing on that crap. And then your economy suffers. Why? Because your economy is made up of businesses and consumers. That's it. Businesses and consumers. 70% of the economy is made up of businesses and consumers. When consumers don't spend, businesses suffer. Why do you think the stock market did what it did on Monday, on Black Monday? Because when you see a softening in the labor market and unemployment going up, guess what that tells to big institutional investors? Companies are going to suffer because people are going to batten down the hatches and they're not going to spend. So these companies are going to suffer. Let's get our money out of here and move it to safety. Let's move it somewhere to safety until this thing blows over, until the Fed gets on their game and lower these rates. Let's move to safety. And that's what you saw on Monday. That's what you saw pre-market. You saw institutional investors, big boy Wall Street investors, billionaire investors moving to safety. That's what you saw on Black Monday. But see, they got one leg ahead of us. Why? Because they use the pre-market to do all of this stuff. You just waking up and washing your face and brushing your teeth, and before you know it, you look at, oh, goodness gracious, oh, heck done broke loose. That's the big boys moving out of stocks, moving out of companies. Early morning before you even get up. You get up 8, 9 o'clock. Oh, I'm ready to go for the day. Market done crash before you even get up. That's big boys. This big boys moving money out of that thing, boy, on Black Monday before you even woke up. They had to move their money out. Gone. That's why I keep telling y'all guys, these people, these 1%ers don't fool around. We around here sleep, hitting the snooze button. These jokers up before the crack of dawn, getting their money out of companies and then left. And but this is what I'm trying to tell you. So that's what pushed Black Monday to Black Monday, is because big boy investors, before the rooster even crowed, they was up getting their money out of equities, moving it to safety, right? And then we wake up after the rooster done crowed. We wake up, all heck done broke loose. We don't know what's going on. Nvidia down to $91 a share. It closed at 107 on Friday. You wake up on Monday morning, that thing at $91 a share, and the market ain't even opened. And you know what kind of panic ensued then. But see, as wealth builders, that was an opportunity, because when I go and look over at my mentorship club on Monday morning pre-market, people are already buying that thing at 90, 91. One lady got it at $90.88 pre-market. Why? Because she's a wealth builder. She understands I'm building my wealth in the red. She ain't panicking, burning up her toast. She ain't doing that. Why? Because she understands you build your wealth in the red, you collect your wealth in the green. So Black Monday was great for us wealth builders. We took advantage of that pre-market stuff. We took advantage of that. As soon as the market opened, we were on it, buying up those assets, buying them at a deep discount. And then by an hour, 2 hours into the market, normal market hours, guess what? Everything started going back up. Why? Big boys were gone. All the big boys had took their money out pre-market, man. They were gone. That's what happened. And guess why it started going back up after when the market opened? Because you had wealth builders like us getting in there buying it, see? See, the big boys had moved out before the market opened. They hadn't already took their money out. They gone. Guys like us, gals like us, we go in when the market opens, we start buying that stuff. We start buying it, so it starts going back up. Take money out of equities, stock goes down. Put money into equities, stock goes up. So big boys took money out, so it crashed pre-market because they were taking money out. I'm talking about institutional investors, big boys. But then when the market opened, retailers who were smart enough, retailers like me and the people over in the Mentorship Club, retailers who were smart enough to understand you build your wealth in the red, we attacked that thing like a swarm of bees on honey. I mean, we attacked it. Guess what that does? It starts the stocks going back up. That's why when you saw the market open, you saw it start to go back in the green because the retail investors, they hadn't woke up, brushed their teeth, collected their faculties, got their coffee. Oh, goodness gracious, opportunity. Boom, they dive in. Big boy's already gone though. That's what you saw yesterday. So if you're a wealth builder and you understood what was going on, you would have attacked it. You would have picked up Nvidia at 91, 92, 93, 94, 95 a share. What is it trading at today? Let's go take a look. I'm glad you asked. I'm glad you asked. Let's take a look at it today and see what it's doing. Let's see what it's doing right now. 105.29. Now think about this. Help me out here. Again, guys, not the sharpest knife in the knife drawer, but help me out here. If you're a wealth builder and you understood what was going on yesterday and you picked this thing up at $91 a share, help me out now. Like I told y'all, 12th grade math, not that bright, but help me out here. It's trading at 105.45 right now. But if I'm a wealth builder and I understood what was going on yesterday and I picked it up for 91, 92, 93, 94, 95 a share, 105 is more than 90, right? 105 is more than 95, right? Guess what you just did if you're a wealth builder and you know what's going on? You just increased your net worth by, I don't know. If you picked it up at $90 a share, you just increased your net worth by $15 a share, just like that. Now, could that go down? Absolutely. But if it goes down, guess what I do? I buy more. I just buy more. But if you understood what was going on yesterday, you would have picked these bargains up. And right now today, you're in the green. What did I tell you? You build wealth in the red, you collect wealth in the green. Somebody right now today built wealth in the red yesterday at 90, 91, 92, 93, 95 a share in Nvidia. And guess what? They can collect their wealth in the green today because it's trading at 105. Like I said, I ain't that bright, but I know 105 is higher than 90. I know 105 is higher than 95. So right there, guess what? I just made money. So if I want to parachute out this thing right now, I'm Gucci. But see, when you don't know this stuff, guys, and you're just in panic mode because you're living in the matrix, and they want you in panic mode because that's how they can control you. When you get yourself out of the matrix and you put yourself in a financial community like we have on Patreon, where people are telling you, guys, this thing is dropping, let's go shopping. See, that's what everybody in that community chat, what I'm a part of, that's what we're saying yesterday. Pre-market. This was pre-market, guys. I had folks over there in the private mentorship club in pre-market dropping comments in the community chat saying, guys, wake up. It's time to go shopping. Wake up. Get your butt up. It's time to go shopping. You better go shopping. And guess what? A lot of them did. And now guess what? They're richer for it today because the stock price is $105 a share and climbing. That don't mean it won't go back down, but guess what? They're in the money today. So if they wanted to parachute out this thing, they could with a nice $10, $15 per share profit. See, guys, it ain't about trying to be the smartest guy in the world. It's about knowing where your opportunities are and being confident enough to seize those opportunities when they present themselves. Yesterday was an opportunity. Thank goodness my folks in the private mentorship club recognize that. They're doing great. They're doing great. So they can parachute out this thing if they want to. They can stay in. Doesn't matter, right? Now, y'all know I'm a long-term guy. Did I parachute out? No. Did I buy any yesterday? No. I already got 11,000 shares, 11,200. I'm gonna make 8 figures in this stock before it's said and done, right? Right? I am. But see, everybody has a different wealth building strategy. Some people's wealth building strategy yesterday was, let me buy it at $91 a share. And if it gets up to 101, if it gets to 105, 110, I'm parachuting out. Nothing wrong with that strategy. The goal is to do what? Buy low, sell high. I don't care how long you hold it. You can hold it one day and buy low, sell high. You can hold it 10 years and buy low, sell high. I choose to buy low now, sell high much later because I'm looking for a much bigger reward. I'm looking for an 8-figure payday. I'm not looking to make $1,000. I'm not looking to make $10,000. I'm not looking to make $100,000. I'm looking to make 8 figures. $10 million. That's what I'm looking to make. That's how I think, though. That's how I'm wired. But I've done this for 30 years and I made a lot of money, guys. So all I'm telling you is this. Opportunities present themselves, but you got to be confident enough in your decision making to take advantage of them. A lot of y'all yesterday was not confident in decision making. That's why you missed this opportunity. Now, good news for you is, in my opinion, 105 is still a bargain. It's still a bargain, and I'm going to tell you here in a minute why I believe that. But we've looked at that, so let's keep moving on about these interest rates real quick. And then we're going to get to why I think it's a bargain at 105. So here we go. Suddenly, shift in sentiment could be seen in the U.S. bond market. We talked about U.S. Treasuries plummeting, right? 2-year, 10-year. Investors are in risk-off mode after an unexpectedly weak jobs report on Friday. Payroll growth slowed. Not only did unemployment rate go up, but what people are getting paid, right, slowed down. So instead of wages going up, wages slowed down. People are not getting raises as fast anymore. That's what they mean when they say payroll growth slowed more than expected last month while the unemployment rate surged. So here we go. Unemployment rate goes up. Payroll growth goes down. That's not good, guys. That's not good. Payroll growth slows, unemployment goes up. That's not a good sign for the economy. It's not. It's not a good sign. That triggered guys, I'm going to spell it for you because I have no idea what I'm pronouncing here. That triggered the SAHM rule, a highly accurate recession indicator that flashes when the 3-month moving average of the unemployment rate surpasses a key threshold. Yeah, because April 3.8 unemployment, I think May 3.9, I believe June was 4.1, and now you got July 4.3. Yep. And I think next month you have 4.5. That'd be my prediction. My prediction is at the end of August, you're going to have 4.5% unemployment. That's what unless you do this emergency rate cut, Fed. That led more investors to wonder whether the Federal Reserve made a mistake in waiting more than 28 months from their first rate hike to ease monetary policy. See, now people are starting to question the Fed. That's where their legacy comes in, guys. Most of these people live for legacy. They're already rich. They're 1%ers. Everything is taken care of for them. They fly private jets. Everything's taken care of. They're rich. See, when you're that rich for that long, you just lose sight of the normal stuff that people do. You don't even know how to. You don't even know how to clean your house. You ain't cleaned it in so long because you're rich. Somebody been doing it for years. You don't even know how to get your own mail. You don't even know how to pay a bill. You don't know how to do nothing other than be what they are because you got somebody to do it for you. So the only thing that's important to these people is legacy. So now you got investors saying, uh-oh, hold on. That led more investors. And when they say investors, they're talking about big boy Wall Street institutional investors, not us. They ain't talking about us. They don't care about what we think. They're talking about the big boys with all the trillions and trillions of dollars of investments that they control. That's who they talk about. They ain't talking about us. They don't really care what we think. Only thing they care about is those trillions and trillions of dollars that these investors have for their clients and for their institutions. They care about them, what they think about them. They don't care what we think about them. They really don't, right? So these investors they're talking about are the big boy investors. Started wondering, hey, Fed, maybe you made a mistake. You ain't reduced these rates in 28 months. What are y'all waiting on? With some urging central bankers to take drastic measures in the coming weeks. So now you got these big boy investors saying, y'all need to act, guys. Y'all messing with our livelihood. If you scare the American people and they stop spending money, you messing with my livelihood. Y'all need to cut these rates to get these American people some confidence so they can go spend again. You need to stimulate this economy because we do not want to be affected by this because of y'all's stubbornness. That's what the big boys are telling the Fed right now. The American people starting to get afraid. They're going to stop spending here soon. They're going to take their little paychecks and they're not going to buy nothing. And that's going to affect companies. And when it affects companies, it affects their bottom line. Just saying, man. The Wharton professor, Jeremy Siegel, talked about this guy yesterday. The Wharton professor, Jeremy Siegel, pressed the Fed to issue an emergency 75 basis point rate cut now. This dude ain't messing around. This dude ain't 25 basis points. Y'all get out of here. Those jokers need to do 75 basis points right now. Immediately. This is what this professor said from Wharton. Great financial mind, right? This guy has a great financial mind. He says, Jeremy Siegel says, and he has pressed the Fed to issue an emergency 75 basis point rate cut, followed by another 75 basis point rate cut in September. So this guy is saying you need to do 150 basis points immediately. I know it's immediately, but I like saying immediately. I know that'll trigger some of y'all, some of my trillionaire comment guys. They've taken time off of the private yachts. They're in here. They'll be up here in a second. Just wait. They've probably already been in here, but wait on them. They coming. They coming. Okay. Back to business. I'm sorry. I know. I can't help myself. When I got billionaires in the chat, I got to recognize them, guys. Sorry. I know y'all get upset with me when I spend too much time recognizing the billionaires, but we got billionaires in the chat. We got very experienced guys. I'm talking about billionaires, Wall Street billionaires that's taking time out of their day to come in my chat. Little old raggedy little YouTube channel with barely 10,000 people watch the videos coming in my chat. Y'all think that make me feel good. I feel special. I'm just a little bitty guy on YouTube. I'm not a big old gigantic channel with millions and millions and millions of views. I'm a little bitty, little independent little channel for the people. And I got billionaires in here stopping in every day. I gotta say thank you, guys. Okay, I've said thank you, move on. Okay, thank you, billionaires, appreciate you. YouTube algorithm, appreciate you too, because yesterday's video was a killer. It was a killer, so thank you. Let's make today's a killer. Keep on commenting. All right, let's go. So, Professor Jeremy Siegel said that the Fed need to do a 75 basis point rate cut immediately. Immediately. Right now. And I agree with him. Then he said, not just right now, but they also need to do it in September. Otherwise, this is what he said now, otherwise, markets risk responding poorly. This guy's 100% right. What did the market do yesterday on Black Monday? It responded poorly. That's why you woke up to chaos. It responded poorly. It responded very, very poorly, just like this guy said it would do. This is why I like this guy right here, Jeremy Siegel, because he be right on the button. This guy be right on point. He said markets would act poorly. They did on Monday. But guess what? If you're a wealth builder, we welcome that because we built a lot of wealth yesterday. My folks over in the Private Mentorship Club built a lot of wealth yesterday, guys. They were picking up some of the best assets in the world at a discount, heavy discount. Heavy semiconductors, whether it be individual stock semiconductors or semiconductor ETFs, picking them up dirt cheap, picking up VOO, VGT, SPLG, FTEC for the low. And y'all know them things going back to the moon at some point. That's building wealth, guys. But if you don't got this right up here, you miss all that because you're scared and afraid on the sideline somewhere panicking because you ain't figured out how to get your mind turned around. You ain't figured out how to get out of your, get your emotional thinking cap off and put the logical thinking cap. You ain't figured that out yet, but we can help you with that over in the membership club. We can help you figure that out. Just got to go down to the second link in the description box and hit the website link, www.richardfain.net, and join us over in the Private Mentorship Club. Fastest growing group fastest growing financial group on Patreon, by the way. Just by the way, just a little tidbit. All right, let's get back to business. So Wharton said 75 basis points now, 75 basis points in September. If not, you're going to risk the markets responding poorly, which we got that yesterday. So this guy knows what he's talking about, right? This is what he says. Since interest rates should be about 175 basis points lower from where they are now, he told CNBC in an interview on Monday. The guy called it. He said the markets were going to go poorly, and they went poorly yesterday. Especially pre-market was horrible for a lot of y'all. Great for me and for the people over in the mentorship club because we know we got to build wealth in the red. So it was great for us. But for a lot of you guys in the matrix over here, it was terrible for y'all. Y'all probably was like, oh my goodness, the world coming to an end. That's because you're in the matrix and you don't understand what's going on. The 1% controlling you. So they want you to think that way. 1% don't control us no more. We control our own financial destiny. See, we're wealth builders. When you're a wealth builder, you control your own financial destiny. 1% don't control it no more. I invite you to become a wealth builder. You don't have to, but I'm inviting you to become a wealth builder. Go to the website, click on the join button, click on the membership button. Get yourself over here in a community of people that can talk you off the ledge. They'll stop you from parachuting out of stuff too early. A lot of us parachute out of stuff too early because we don't know no better. We control by the 1%. 1% say parachute out, you parachute out. Not over there. We ain't not controlled by the 1%. We go to each other and say, hey man, this is what I'm thinking. What do y'all think? Hey guys, I'm on the ledge. I'm about to parachute out this thing. What y'all think? Hold on. Here's some things to consider before you parachute out. Let me give you some ammunition to help you out, make your decision. I can't make it for you, but let me give you these tidbits right here. You may want to look at these things right here before you parachute out. See? But you don't get that over here in the matrix. They want you to parachute out early, right? They want you to parachute out early. They want you to sell when you really should be buying. They want you to buy when you really should be selling. That's the 1% for you guys. How much have we moved the Fed funds rate? 0. This is what Siegel is saying. And this is what I told you, 28 months. These people have not reduced rates in 28 months. So this is what Siegel is saying. How much have we moved the Fed funds rate? 0, he said. That makes absolutely no sense whatsoever. Why in the world are you not lowering rates when you've gotten a report that's telling you? Matter of fact, it ain't one report. You've been getting 4 reports showing you that unemployment was going up. You've been getting reports from April. April started this thing with the unemployment rate. So April, May, June, and July, you've gotten 4 reports in a row that show inflation is going, not inflation, but unemployment is going up. And inflation is just staying right there, steady Eddie. Ain't even really moving up or down. It's just steady Eddie. So you've done your job, guys. Inflation really hasn't moved since July of 2023. when you stop increasing. Inflation hasn't really moved that much in almost a year. Matter of fact, it's been a year. Y'all tell me, how much has inflation moved in a year? Not much. So that tells me your monetary policy worked. What you should be doing now and be afraid of now is keeping it too high, too long. And that's what the experts are telling you. You're keeping it too high, too long. Just saying, guys, that's my opinion. I agree with Siegel. If they are going to be as slow, see, this is what I told y'all earlier. Listen to this. This is what I told y'all earlier. Here's your legacy right here, Fed. Here's your legacy. If they are going to be as slow on the way down as they were on the way up, which, by the way, was the first policy error in 50 years, then we're not in for a good time with this economy. Basically, what he's saying is these guys were too slow to increase, and now they're too slow to decrease. That's basically what Siegel is saying. And he's saying this is the worst policy error in 50 years. All on your watch, Jay Powell. See, leadership reflects attitude. Your leadership is going to reflect the rest of your FOMC. Guess who they're going to blame? You, Jay Powell. It's going to be a part of your legacy, not the rest of them guys and gals in your little FOMC. Ain't nobody going to remember them. They're going to remember you because you're the chairman. Attitude reflects leadership. Attitude reflects leadership. Think about that. Attitude reflects leadership. So the next time you're yelling at your kids or you're going crazy on somebody, think about who the leadership is. If things are disarray in my home, guess who I should be pointing the finger at? Who the leader in the home? Who the leader in your life? That's who you point the finger at, the leader, because attitude reflects leadership. Just saying, guys, a lot of us like to point finger. Who? That guy over there. That guy over there. That girl over here. No. Who's the leader in your life? Who's the leader in your life? Attitude reflects leadership. If something ain't going right in my household, guess who I need to go in the mirror and look at? Because I'm the leader in here. I'm the leader. Attitude reflects leadership. Change your attitude as a leader, and the people that follow you will change their attitude. You feel me? All right, let's keep moving. The Nobel Laureate, I don't know what all that is. That must be the Nobel Peace. I don't know. The Nobel Laureate. I don't know what that means. Somebody can Google that. I don't know what that means, but it says the Nobel Laureate, Paul Krugman, also said he saw a case for an emergency rate cut, pointing to the panicked sell-off in stocks, which was yesterday. I wasn't calling for a inter-meeting cut because that might signal panic. But since we may be seeing a panic anyways, that argument loses its force. Real case for an emergency cut soon, he said in his post on X. So you got more experts. This guy, I'm assuming, what did it say here? Nobel Laureate. I don't know what that means. I don't know if he's Nobel Peace Prize, Nobel. I don't know what that means. But he seemed like a smart guy. That all those words in front of his name seem like a smart guy. So this guy is saying the same thing. Saying the same thing. He said, I wasn't calling for an intermeeting cut because that might signal panic. That's what he said. Then he said, but since we may be seeing a panic anyways, which we're in a panic, he's saying you need to go ahead and cut these rates, man. The Fed typically only implements interest rate changes during its scheduled policy meetings. See, that's going to get us in trouble, though. Oh, no, we can't do it. We got to wait till September. You know we've never done that before. Who cares? Do it right now. It's in your power. It's in your scope of power. Do it. Save the American people some heartache, man. We know the 1% will be fine. The 99% save us. Throw us a bone, man. The Fed typically only implements interest rate changes during its scheduled policy meetings, but it has issued early rate moves during times of extreme volatility, such as the pandemic or the dot-com stock crash. So they've done it before. They did it when they decreased rates during the pandemic. Markets are also ramping up their bets for steeper than expected rate cuts through the end of the year. Investors are now pricing in a 92% chance the Fed will cut rates by 100 basis points or more by the end of the year, according to the CME Fed Watch tool, up from 0.2% odds priced in a week ago. So now you got the odds that they will reduce by a full 1% before the end of the year, 92%. What can you do with that information? You can plan. Because at some point, you do know FOMO gonna kick back into this thing in the market. This correction and this period of consolidation will end. FOMO will come back and it will drive everything higher. So right now, where we're in a period of redness, deep redness, I would recommend you consider adding some to the war chest. I would consider buying some assets, because the only thing we can look forward to now is it going up, which it will, especially since we had Black Monday. That was really a clean out for a lot of the big boys. They had already beat us down for the last 2 to 3 weeks, right? They've been beating us down for the last 2 to 3 weeks, beating us down. And then the news on Friday with this crazy jobs report was just the icing on the cake. Cherry on top of the ice cream sundae for them. They really beat us down then. They used that piece of information to really panic everybody. Therefore, guess what? You had Black Monday. Now, the only thing you can look at is up. Question is, are you going to take advantage of that up? Are you going to take advantage of it, guys? That's the question. I don't know. You may not. I'm going to take advantage of it. The wealth builders and the mentorship club, they're going to take advantage of it. We now expect faster cuts because the funds rate looks more clearly inappropriately high, Goldman Sachs economist said in a note on Monday, raising the odds of an incoming recession to 25%. The Fed looks behind. See, I'm telling you, it's coming. Goldman Sachs on record saying the Fed looks behind. Basically, just the Fed just behind the 8 ball right now. The Fed should be in front of this thing, not behind it. They should be in front of the 8 ball, not behind the 8 ball. That's what Goldman Sachs is saying. Big boy blue chip Wall Street firm, right? The Fed looks behind. Having worried too much about inflation for too long and held steady in July when they should have been cutting. I told y'all that they should have cut. Go back and look at the channel last week, like Monday or Tuesday last week before the Fed meeting on Wednesday. I told y'all they should have been cutting in July. And that's what Goldman's is saying. Goldman Sachs economist is saying the same thing I said. The Fed looks behind, having worried too much about inflation for too long. Told y'all inflation ain't moved in a whole year, man. A whole year. It's been sitting right where it's been sitting for a whole year, and these people are still stubborn to reduce these dang on rates. Your legacy already out the window, Chairman. All you can do is try to save yourself right now, man. I'm just a little word to you, Chairman. Your legacy already blowed up. You're going to be remembered by the guy who waited too late to increase, and you waited too late to reduce. Decrease, increase, you waited too late. So your legacy done. All you can do is try to do something dramatic to buy up, get a few more brownie points on your side. Right now, you're already a disaster as a Federal Reserve guy. Disaster. What you can do now is do something out of the ordinary to try to get you some brownie points. That's all you can do right now, man. And the rationale for cutting now includes the more urgent priority of supporting the economy. That's coming from Goldman Sachs, guys. That ain't coming from Richard Fain. That's coming from Goldman Sachs, one of the big boy blue chips on Wall Street. So you got Siegel, you got Krugman, and you got Goldman Sachs. All of them saying, I don't know what the Fed doing. They done waited too late to increase rates back after the pandemic. They waiting too late to decrease rates right now. We already done had Black Monday. What do you want us to have? Black Monday, Tuesday, Wednesday, Thursday, and Friday before you do? I don't know, man. These folks, okay. Let's see what we're doing in stocks today. Let's check on stocks. S&P raises as benchmark tries to recover from worst day in nearly 2 years. That was Black Monday, by the way, if you guys are just checking in. And if you guys are just stopping by the channel, that was Black Monday. It was a disaster for many 99 percenters, but it was not a disaster for some of my folks over in the Mentorship Club. It was an opportunity for us to buy wealth. I'm sorry, build wealth. Buy assets to build wealth. Yesterday was an opportunity for us, and we capitalized on it. We bought a lot of assets yesterday out of that 850 member financial community. We bought a lot of assets yesterday, man. Y'all got to get over in that community chat and see these assets these folks bought yesterday. I was so proud of them. I was so proud of them. They bought a lot of assets. They still buying today too. I was over there this morning, man. People dropping stuff in. Oh yeah, I done went shopping this morning already. I got pre-market. I got doing the regular. I'm already good. I've done my shopping. I'm going on about the rest of my day. See, when you got a community of people like that, that's how they thinking, and that's what they doing. That's perfect. That's perfect. See, all these people around here waiting, and oh, it's gonna go lower. It's gonna go lower. It's gonna go lower. I'm gonna time the market. I'm gonna be the expert. I'm gonna say, ha, I told you. Who cares? Who cares? No one cares about those people. People care about people that are actually doing something, not people that always talk about what they're going to do. Oh, I'm going to do this. I'm going to do that. I'm going to wait. I'm going to do this. I'm going to do that. Don't do nothing. Don't build no wealth. Don't do nothing other than in my chat, live chat. Saying stuff in the live chat, it ain't building no wealth. My people are actually building wealth over there on the private mentorship club. They're building wealth. They're buying right now. Guarantee you somebody over there buying. They're picking up something. And they got a variety of different investments, guys. That's the crazy part about it. No, everybody ain't just buying the video. No, these people buying everything. I'm talking about everything, man. And they present a strong case for it because they already know when I ask them if you're gonna drop something and have people take a look at it and put it on the short list, drop some research with it so that these people can start off the right way. Don't be just dropping stuff because your neighbor said drop it. No. Drop it because you done did the research and you attach that research. That's the great thing about it. They do that. So that's awesome, man. That shows me they're learning. See, they're learning how to research things on their own, which does what? Adds to their confidence level. See, that's what you got to connect those dots, guys. When you get to a point where you can go out and do basic research, not an expert, not going down every rabbit hole, but just basic research. That increases your confidence level. You become a better wealth builder. You ain't sitting around waiting for somebody to feed you like a little baby get fed. Oh, open your mouth, Richard. Let's put this food in there. No, you go do your research. Right? That's what my folks are doing over there. If you want to become part of that, I already told you how to do it. Get to the website. Join. What you waiting on? Go join. You want to stay in the matrix? And be controlled by them for the rest of your life, or you want to come over here and get you some independence? Dependence, independence. Your choice. You can be controlled and be dependent on the 1% the rest of your life, or you can get over here and learn how to be independent and be a wealth builder and control 100% of your time. It's your choice. Pretty easy choice to me, but I know some of y'all are stubborn. I ain't going over there. I'm going to stay over here. I ain't going over. Okay, stay there then. Here we go. S&P 500 rose on Tuesday after the broad index notched its worst day in nearly 2 years as global markets sold off. The benchmark traded 0.4% higher along with the NASDAQ composite. That's today. The Dow rose 48 points. That's this morning. Several big technology stocks rebounded after a sharp pullback on Monday. Nvidia, or Nvidia, however you want to pronounce it, rose 2.6%, while Meta gained more than 1%. Meanwhile, Apple continued to decline and fall 2%. One of the reasons because, you know, your boy Warren Buffett sold off half his Apple position. And y'all know how it is. I mean, this guy's like a rock star, right? So whatever he do, other people want to do. I mean, Warren Buffett did it, I'm doing it. I'm selling Apple too. I'm going to sell half of my Apple. Warren Buffett sold half of his Apple. I'm going to do what Warren does. So Apple's at a discount right now, guys. It will rebound. It'll shake this off and boom, you got some instant wealth, right? So put Apple on the short list and take a look at it. I looked at it this morning. I got a little bit of Apple, just teeny weeny bit. Helping sentiment was a rebound in Japanese stocks. So yesterday, Japanese stock market, whatever they call it, the Nikkei 225, and I know I'm pronouncing that wrong probably. The Nikkei 225, when you looked at it on Monday, that thing had fell by, I don't know, they said that thing fell by like 4,400 points. That's a lot. So that was one of the things that really started this downward run, right? Is the Nikkei 225, which is the Japanese stock market. I'm assuming that's what it is. Again, I ain't going down that rabbit hole. You want to go do the research, go ahead. I don't care nothing about no Japanese stock market. Only thing I care about is the United States stock market, United States companies. All the rest of this stuff around the world, I ain't got no problem with these people or what they do. I don't care about those companies. All I care about is U.S. companies, because that's where my money at, right? You can care about what you want to. I care about U.S. companies. Helping sentiment was a rebound in the Japanese stocks. The Nikkei 225 posted its best day since October 2008, soaring 10.2. That surge comes a day after the benchmark suffered its worst day. So the Nikkei 225 yesterday suffered its worst day, came back on Tuesday, whatever Japanese time, Tuesday, its best day. I mean, it's just crazy. This is what happens though at the 1% level though. These people, they manipulate everything in every country. They manipulate everything in every country to make money. Japan is no different, right? No different. They manipulate it, right? But if you know that manipulation is going on, you can take advantage of it. You know the rules to the game, you can play in the game, right? The moves follow a sharp sell-off during Monday trading amid concerns over the state of the economy. The 30-day Dow dropped 1,000 points. Matter of fact, it dropped 1,033 points. The Dow, 2.6%. S&P, 3% slide. NAS, 3.4% slide. A major unwind in the yen carry trade. Don't know what that is. Y'all go out and research it. I have no idea what that is. And don't worry about it. I ain't worried about it, but y'all can go check it out. A major unwind in the yen carry trade. Oh, matter of fact, maybe one of the billionaires. One of the billionaires in the chat can tell us what that means. One of the billionaires that are in the chat right now, in the live chat, I'm asking one of the billionaires to tell us what a major unwind in the yen, Y-E-N, I guess that's, I don't know whose currency that is, but it's somebody's currency. Maybe it's China's, maybe it's one of them countries. Y'all tell me in the chat, one of the trillionaires, the billionaires. What is a yen carry trade? Also contributed to the volatility, because I have no idea what that is. Oh, the yen is Japanese currency, I guess. So the Bank of Japan last week raised interest rates, contributing to a rise in the yen. That's affected the practice of traders borrowing in the cheaper currency to produce other global assets. So I guess a carry trade got something to do with Forex trade. Can somebody help me? One of the billionaires, y'all drop it in, one of the billionaires, because I know y'all know this stuff. Y'all smarter than me. That's why you're in the chat. You're smarter than me. That's why you're in the chat. So please drop it in there. After such a strong rally since last fall, valuations, sentiment, and investor positioning had become stretched, said Quincy Cosby, LPL Financial Chief Global Strategist. What markets are experiencing today is an unwinding of that bullish positioning, which is particularly evident in the yen and the so-called carry trade. Many investors have come to view Monday's sell-off as long overdue in the markets that reached high valuations and new records. with some cautioning that the pain may have more room to run. I get it. When you run these stocks like it's been run over the past 6 months, guys, in relationship to high interest rates, and I've told you guys, normally when you have a high interest rate environment, like a high Fed funds rate, stocks don't run like that. They normally don't do that well. But since we had a lot of FOMO that carried over from the last 2 months of 2023 when the stock market went to all-time highs, you had a lot of carryover from that last quarter of 2023 that carried over into 2024. Plus, you got to also remember in the beginning of 2024, we had wide speculation that the Fed would reduce in March. So you had the FOMO from last year, just from the bull run of last, or the continuous bull run of last year. And then when that carried over into 23, coupled with the expectation that the Fed would reduce in March, that took the stock market higher. So now what they're saying is okay, it's about time for this thing to settle itself down, consolidate, have a correction. We didn't get the rate cuts like we thought we would get. We still don't got the rate cuts. So let's pull this thing back. Let's pull it back until we are sure we're getting the rate cuts. And then I think you'll see another run once the rate cuts kick in. Now, that's what I believe, guys. I could be totally wrong, but that's what I believe, right? And that's what this guy is saying, right? He's saying many investors, this guy's saying after such a strong rally last fall, I keep telling y'all, not April, but like October, November, December, when we had that run last year, that 9-10 week run, it was incredible. And then that carried over into 2024. On top of that, we were anticipating those rate cuts in March. So those two things together took the stock market higher, way higher than it really should have been, is what they're saying. So they're saying this correction right here is needed to bring valuations back down, put them in line, but it will run again because y'all know, like I've always told y'all, that's the whole point of the stock market, is to run, and then have a period of correction, consolidation, and then run again, period of correction, period of consolidation, and run again. That's what the stock market does. That's the whole purpose of it. It wouldn't exist if it didn't operate that way. It would make no sense to exist. The whole point of the stock market is to have more green days than you have red days. That's how people make money. But you got to have some red days to keep it in the right perspective, because things can't just continuously go up higher forever. They got to come down at some point. That keeps it in the right perspective. When you know this psychology of the stock market, you know how to build wealth. Ain't nothing wrong with Nvidia. Ain't nothing wrong with the rest of them semiconductors. Ain't nothing wrong with the hyperscalers. Ain't nothing wrong with the mega caps. Nothing. Other than it's time for us to bring the valuation down, cool this thing down, reboot this thing, and then let's go at it again. That's all it is. That's the stock market. Look at the history of it. Look at the last 40 years. That's what it's done. So, knowing that, be prepared. Get your mind right. After such a strong rally last fall, valuation, sentiment, investor positioning had become stretched. And that's the truth. It had become stretched. That 10-week run in 2023 to end 2023 was one of the greatest stretches in the history of the stock market, guys. Greatest stretches. And then on top of that, that backside, when we turned the corner and came into January and February, guess what we had? FOMO, because we were looking for them interest rates to come down. We were looking for an interest rate cut in March. So that thing kept running. When we didn't get the interest rate cut in March, things started slowing down. Remember, we hit April and we had that little mini reset in April. And then things did what though? In May, they did what? They kicked up again. Why did they kick up in May? Some of y'all in the chat don't know why, but why did they kick up in May? Nvidia. Remember, Nvidia came out at May 22nd with his first quarter fiscal year earnings and killed it. Sent everything back to the moon again. And then June hit, things started slowing down again. And then, of course, we fell off the cliff in July. And then we had Black Monday yesterday. So it makes sense to me, and I understand what's happening, but I also understand this about the stock market because I've been doing it for 30 years. It will go higher. That's the whole purpose of it. There is no point in having a stock market if it ain't gonna go higher. That's the whole point of it. That's how you make money. So this is an opportunity for us right now to collect these great assets and be patient. Collect them, 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 and be patient. They will go back up. They will, guys. Come on now. Just use your logical thinking cap. What's the point of the stock market if it's not going to go back up? There's no point of it. The whole reason the stock market exists is to make money. That's the whole point of it. Yes, when you understand opportunities like we had yesterday, there are so many people that made so much money yesterday. So much money. So much money. You think about it. Some people picked Nvidia up at $90 a share. Now, could it go lower? Absolutely. That's okay with me. I ain't worried about that because I know what the whole purpose of the stock market is. All that crap is temporary. It's all temporary. So what you do is you keep buying. If you're a guy like me, you keep buying. Because I know over my 30 years, it's coming back. And when it comes back, guys, whoo, goodness gracious. Your boy gonna get even richer. Them people over in the private mentorship club gonna get richer. That's my opinion. You guys come up with your own opinion. What markets are experiencing today is unwinding of a bullish position, which is particularly evident in the yen and the so-called carry trade. Many investors have come to view Monday's sell-off as long overdue in a market that's reached high valuations and new records, with some caution that the pain may have more room to run. It's too early to say the low is in, said Keith Lerner, Truist co-chief investment officer. There has been damage done, and the repair process will likely take time. However, the risk versus reward appears to be gradually improving as the markets bear for positive surprise resets lower. So here's the deal, man. That's on you what you want to do and how you're going to do it. What I'm here to tell you is if you want to build wealth, no greater opportunity in American history than right now. No greater opportunity. But you got to put yourself in position. You got to have a brokerage app that allows you the opportunity to buy these big boy blue chips and buy them quick and fast and painless with no commissions on trades, no monthly maintenance fees, no annual maintenance fees, right? And that would be Moo. That's my self-directed brokerage app that I'm using, guys. First link down in the description box. Try it out, man. They're going to give you up to 20 free stocks. Big boy, publicly traded. I don't know if they're big boys, but they're publicly traded. Could be $2 to $2,000 a piece. Publicly traded companies. Right? Who knows? Might get you a mega cap. Might get you a hyperscaler. Might get you a semiconductor. I don't know. Why not take a shot? I don't know, guys. I'm just trying to give you an opportunity to put yourself in a position and get out of the matrix. So get yourself down in the description box, click on that Moo link, and get yourself signed up today. Go put you some money in your account. ASAP. Pronto. $100, you get 8 free stocks. If you put $100 in pronto, ASAP, you get 8 free stocks. Remember, I said free, guys. Because people, oh, golly, I put my $100 in. When do I get it? I paid for my stocks with my $100. You ain't paid for no stocks. It's free. Your $100 now you get to use to go buy big boy blue chip assets. You ain't paid for nothing. Free. I mean, I don't understand why people can't get the concept of free. I say free every day. It's free. There ain't no you paid for nothing. It's free. So you get 8 free stocks when you qualify by putting $100 in your brokerage account. ASAP, pronto, not 10 months from now. Pronto. You open it today, transfer the money into the day. Pretty simple. You put $1,000 in there, you get 20 free stocks. Pronto. ASAP. They're going to give you 20 free stocks when you put $1,000 in your new brokerage account. Guys, where I come from, I ain't turning down no free money. See, we won't turn down free money where I come from. Somebody say, hey man, here you go, 20 bucks. Go ahead and buy yourself something nice. Okay, thank you. I don't care if I got 200 million. I'm taking that 20 bucks. We just don't turn it down. I come from a part of an era where, hey man, 20 bucks went a long ways. So 20 free stocks goes a long ways. Long ways to you building wealth. You never know. Like I said, what if you get a hyperscaler or two? What if you get a mega cap? What if you get a semiconductor? Some things can be worth a lot of money down the road. I'm not saying you'll get that. I'm just saying there's an opportunity for that. You get 20 free stock of publicly traded companies. So get down in the description box and click on that Moomoo link. Get yourself signed up today. Don't delay. Get signed up today. And then send me an email and let me know you've signed up for Moomoo. And I'm going to send you 2 tutorial videos to help you what? Collapse time frames, learn how to use this thing and get yourself to freedom. All right? Now, I know my billionaires ain't got no need for that because they're billionaires. They're billionaires. They're very educated. They're very smart. They've been dealing in stocks, ETFs, day trade, options trade, Forex trade, derivatives trade. They know it all. They know it all. And I'm pretty sure they've had all kind of stuff in the live chat here. They know it all. So, hey, would I listen to them? Absolutely not. I wouldn't listen to one thing they say, right? Because if they were that smart, they would not be in this chat. Y'all, I keep telling y'all that. Listen, man, anytime I see somebody in my live chat or in my comment section trying to tell people what to do or what they should do, I know immediately do the opposite of what they're telling me to do. Because they don't know what they're talking about. Or they wouldn't be in my chat. I'm a little YouTube channel. Why are you in my chat? So don't listen to them is my point. Don't listen to nobody in this live chat. Don't listen to nobody in that comment section. If you want to get yourself around people who got your best interest at heart, get yourself over to the private mentorship club through the website. I wouldn't listen to nobody in my YouTube comments, nobody. And I would never listen to anybody in this live chat. Never, ever, 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 ever. It's all a tool for me to use, guys. The live chat is a tool for me to use to get the algorithm to throw this content out to more people. That's the only reason I got the live chat on. The only reason I got the live chat on is because I need engagement. Engagement on the YouTube platform is gold. So the more I can get the billionaires in here doing whatever they're doing, that's more engagement. So now the YouTube algorithm will say, oh, golly, this little guy, Richard Fain, on his little channel, he got like 15, 2,000, 2,500 live chat going right now. Shoot, let's throw this dude out to another million people. Let's throw this dude out to another million people over here on this side of the country. I know he lives in Florida, but let's throw him up here to the northwest part of the United States where all these millions of people at that don't know nothing about him. That's what it does. So I turn the chat on. I turn the chat on just for that reason. I do not turn the chat on for you guys to listen to anybody in here. It's all for the YouTube algorithm. Please understand that. Do not listen to these people. They do not know what they're talking about, right? Do not listen to anybody in the comment section. They do not know what they're talking about. If you rock with me and you want to get around people that know what they're talking about and that are really here to help you, get yourself over to the private mentorship club. Join through the website. Get yourself around 850 people who are going in the same direction you're going in. Do not listen to these billionaires in the comment section. I'm using these billionaires for a reason because I'm a smart YouTuber and I know how to make money with YouTube by getting thrown out to more people. So I use the chat when I need to use it in order to boost the algorithm. That's the only reason I'm using it. I'm not using this chat for you to pay any attention to these people or try to learn anything from them because they ain't gonna learn you anything. All I'm telling you, if you want to learn something and you want to know how to become a wealth builder, go to the website, click on the join button, click on the membership button, and join a group of people who I do recommend you listen to when it comes to their experience. None of us are professionals over there. We're not financial advisors over there, but we are a collective group of people who are wealth builders, and we are willing to genuinely share our experiences with you to help you make better decisions for your future. That's who you listen to. That's where you go to cultivate being a wealth builder. Not in this comment section of these videos, and certainly not in the live chat. Well, thank y'all, man. I think I have reached my Time. Let's see how we did today. Okay. What do we have here in here today? I think we had about 1,400 people in the chat. Thank you, billionaires, for that, because that means we got thrown out to more people from the billionaires. So thank you, billionaires, for the 1,400 people in the chat. Thank you, billionaires. What do we have? Almost 6,000 views. Thank you, billionaires. I appreciate y'all for that because, yeah, I thank you. We got a chat rate of 14. That is amazing. Let's see what else we got in here. See what else the billionaires have done. No, let's look at the analytics. Okay, good chat today. So thank you guys for stopping by the channel. I appreciate all the super chats as well. For all of y'all that dropped the super chats, thank you very much. You didn't have to do that, but I certainly appreciate that. I certainly appreciate all my wealth builders who rock with me, who genuinely rock with me and are here to hear information to help them become better wealth builders and to make sure that they're taking advantage of the greatest opportunity in American history to build wealth. Thank y'all for stopping by. Appreciate y'all more than y'all know. Like I said, get down in that description box and go crazy. You got the Moo link where you're gonna get 20 free stocks. You got the website where you can go pick up these fantastic digital products to help you collapse time frames and get to your pot of gold at the end of the rainbow. You got that. You got the private mentorship club. But that's a whole nother level. If you want to go to a whole nother level, the private mentorship club is going to take you to a whole level. Plus, you got me over there that you can have a direct conversation with me without anybody else seeing it. Just me and you, one-on-one every single day. As many direct messages as you like to send me, I'm going to answer them. That is priceless to me, guys, because I wish when I was 26 years old, I had a direct line to somebody with 30 years of experience doing what I'm trying to do, and they are where I'm trying to get to. See, it ain't got nothing to do with how much wealth I got. What it has to do with is I control 100% of my time. I control my own financial destiny. See, that's where you want to get. You want to get to the point where you control every second of your day, which I do. I don't do nothing I don't want to do. Why? Because I got assets that generate income. That's where you want to get to. So you get that. Not just me now, because you got other people over there with similar experience as me. And I would say probably some of them have a better net worth than me. I'm pretty sure some of them do. That's what I love about it, though. I love that people would take their net worth, which they don't have to do this, and they come over here and lend their time and their experience to help people. That's what we do over there as wealth builders. So come join us. Don't delay, act today. Come join us. And don't forget about following me on Instagram. Link down in the description box. Give your boy follow. And then send me a DM to let me know you're rocking with me so I can say thank you. Appreciate y'all, man. Lock it in with a thumbs up before y'all get out of here. I'm going to see y'all. I might see y'all tonight. I may not. I don't know. I know yesterday I said I was going to come back at 6 p.m., but I didn't. I told y'all sometimes, I get a little mental break. So we'll see if I'm up to it this afternoon. If not, I'll put an edited video up. But if I'm up to it, I'll come back this afternoon at 6 p.m. Eastern time with another live stream. If I'm up to it, I may not be up to it, but if I'm up to it, I'll do it. Also, if I'm not up to the live stream, I'm definitely going to put an edited video up. A little shorty, about 8-10 minutes. And I'm going to put that up on the main YouTube channel as well. Y'all do me a favor. Get over to the second YouTube channel and subscribe. It's Richard Fame Millionaire Mentor. That's the second YouTube channel. I think it's down in the description box. That's my second YouTube channel that I'm rocking with, doing some stuff over there. So come check that out. I got different little stuff I put up on that one as well. I do a lot of reels over there. Not reels, what do they call them? Shorts. I do a lot of shorts over there and little stuff like that I don't want to do on the main channel. So do me that favor. If you want to rock with me, definitely get over there and subscribe to the second YouTube channel, Richard Fame Millionaire Mentor. Instagram channel, second Instagram channel, YouTube channel, not no Instagram channel, YouTube channel. And they also have an Instagram page, just call that too, so I get confused. But y'all know what I'm talking about. Just get down in the description box and support your boy just like I support you, right? Lock it in, man. Thoughts become things. See it in your mind, hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy. And you know your boy gonna catch you on the next video. Nvidia to the moon!